Good morning, everyone, and welcome to the European crossover webinar. And we did get some Italian data came in, unbelievable. It actually came in on time. Industrial output came in at 1%, a little bit stronger than what they were expecting. And then previously we had German import and export prices come in. Those came in somewhat better here. You can see that 1.4%. They're expecting negative 1.2, and although the imports did come in a whole lot weaker. Now, at the top of this next hour, we will have final employment out of the Eurozone, and we do get GDP revised. Nothing here in the States. We do have some NFIB business optimism, but that's beyond low tier. And then some Mexican inflation. Take a look overall, you can see we've seen a nice rebound here in the euro dollar. That actually came into our bias chart support. I think we had a two-tier and we had 1853 was our secondary, which that was pretty solid. And if you look here on the profile, we'd done some work previously before, and I think it's from the previous week as we were coming into the non-farm payroll. But you can see here yesterday's profile. You can see the volume point of control here was at 1858. This is on the futures, but right now the futures, it's a March, so they're basically trading the same as the cash. 60s 1894 and a half, which is euro is 1893. So tit for tat, basically even Steven right there. But the volume point of control is right there at 1858, 1859. And then the most amount of time as far as time opportunity right here, you can see was just a little bit lower, was right there at that 1856. So we did have some prints down here as we dipped low in the day, but once again, that was key support there. And if you take a look at it here on the here was at 1870, and we did have a little bit of a dip to take us down here to, I think I had we did go below that, but I'm saying is our bias chart support, if I remember correctly, was 1853. So we're seeing a nice rebound here. Dollar index is also paired back. I did go and allow for, in the bias chart, resistance for today for Asian analysis. It could come up to 92.68. I didn't think that was likely, but still had to go on. And as I told you before, you can't even think about calling this a bull run or turnaround until we get above 92.68. And I still wouldn't even consider that unless we saw 2 consecutive days above 92.68. Well, we didn't even make it to 92.68, and it's already turning around and heading south. So there we go there. We'll take just a quick review or take a quick look at indices. You can see here yesterday we came back up here, and I just completely had misread this. I thought, well, the Dow actually was going to its highs, but they were really discounting this NASDAQ, and they just kept on, and it would look like it would kind of hold, and it would just dip back again, kind of held on again, it would just dip right back again. We're rebounding today. I think this has more to do with bonds are coming off those lows. I can go on and point to you there. I'd shown actually from, I guess, a couple of weeks back when this thing started to turn. I had a support from way back then when I looked on the weekly chart, and that came in at that 31.23 and a half. It appears that's where we bottomed out at, and that might be what's kind of turning things around. It would appear, or maybe they're probably thinking that we're a little bit overdone in things, which we really did. I mean, I know that Apple, I think, went all the way back down to 116, which potentially I thought it could get to from a longer term horizon. I didn't think it would get there this quickly, but I haven't been paying much attention to it. As I said, FANG would just do their own thing while other stocks, pandemic plays, would send the NASDAQ to, all-time highs day after day after day. So I just quit paying attention to that and focus more on the profile itself. But you can see here we're coming up here towards this resistance at this 12,543. Looks like we just got to 540. So we'll see if maybe we take a little bit of a pause there. We are above the 2-day VWAP and single-day VWAP. So maybe we'll take a little bit of pause there. We shall see. And then take a look at the S&P. That's even working a little bit higher, although that didn't take the same hit the way the NASDAQ did. So with that, we'll go on and move into the news. Australia and New Zealand dollars edge lower as investors seek the safety of the greenback. Aussie and New Zealand dollars slipped against their U.S. counterparts as investors sought the safety of the greenback amidst elevated government bond yields and expectations of an economic recovery strengthening. The Aussie fell to 76.21. The surge in U.S. dollar has put paid to the Aussie dollar. It doesn't make sense. But anyway, Westpac's statement said in a note, I guess that might be an Aussie phrase, has put paid. But while the appeal of the greenback is likely to continue, other factors include the strength of the Australian economy and its recovery. High commodity prices would likely support the Aussie. Measure the Aussie business confidence continues rose to decade highs for February as sales profits and employment picked up sharply in a sign of combined economic recovery from last year's COVID pandemic. The Kiwi dollar was similarly 15 tenths lower at 71.08. Kiwi was Aussie bonds were stable near the highs ahead of a speech by RBA Governor Philip Lowe on Wednesday when he will speak about the country's economic recovery and monetary policy. And lastly, the dollar reigns supreme on yields and recovery advantage. Like I said, it's already turning around. The story was a little earlier, but we've seen a pretty good sharp rise in the euro. Euro's up. Actually, the euro right now is only 5 pips away from 119. The dollar held a 3.5-month high against its rivals on Tuesday night as higher bond yields and expectations of faster economic recovery, economic normalization from the pandemic put the U.S. at advantage. And against the yen, the dollar rose to 109.23. Safe haven Swiss franc softened to 96.39. The movies the last 2-3 weeks has been driven by yields, and that's what's supporting the dollar. It's interesting that despite the U.S. equities having started to bear the pain of rising yields, dollar yen continues to make new highs. That's the pair's own risk correlations that have broken. The dollar's also firmed 2% so far this year on upbeat macroeconomic data combined with monetary policy. All eyes now on U.S. Federal Reserve's 2-day meeting next week, although expectations are low that the central bank will announce major policy changes. After Powell said last week he did not express concern about the rise in bond yields. The thing markets are going to get from the FOMC that's new is an update to the forecast for inflation, economic growth, and employment. They're going to have upgrades if they've already taken into account the most certain passage of the stimulus package if they haven't taken that into account because it's not law yet. Traders are wary of yields that could rise further as the week have to sign and digest a $120 billion auction. So that'll be key. Traders are wary of those yields. For that auction is going to be 3, 10, and 30-year, especially after last week's soft auction and a horrible 7-year note that saw a spike in yields. With that, we're going to move into the analysis. And there's the 10-year note you can see coming off those lows at 31.23. If you look at it on a weekly chart, you can see that support. So the euro continued to pare back as U.S. interest rates increase. Support for the euro will be 1838/53 with resistance at 1913. So we're holding that. We did dip down to that 1838. Almost a bit surprised we dipped that low, but I guess they're precedent still. So we'll stick to that 38.53. Here's that lower tier, the 53. Now it's going to be the upper tier. 38.53, 1913. And let's go move into the cable. So cable posted a spinning doji on Monday. You can see it right here, suggesting the down move may be stretched. Support for Tuesday will be 37.70 with resistance at 39.10. And I put wider ranges because just to allow these markets to, if they were going to try and push lower or high, trying to run stops. So hence that's why we've got this extra space in there. Move on to the Aussie dollar. The Aussie closed lower on Monday, but was able to hold above the bias chart support of 76.23, as we had actually had that for Friday and it held, and yesterday we held above it. And well, it looks like we did come down here and test. Well, for today, we've come down. So which will remain for Tuesday. Resistance will be 77.32. So it looks like that's held today. 76.23. Difference is it's going to be, looks like it held right to the pip too. And 77.32 will be some resistance. Onto the Kiwi. The Kiwi, just like its cousin, Aussie, closed slightly lower on Monday. Support will be 71.08 with resistance to 71.89. Oh, looks like that's pretty close too. And on to the dollar CAD. Dollar CAD closed Monday with a doji. You can see that right here. Resistance will be 27.12 with support at 26.10. We are dipping back in here, so. Onto the dollar peso. Here's that extension. If you remember 3 weeks ago, now I've left, I put that back up here, but we had that, we were talking about how it based, and we went with this closing bar here, measured it out. When you measured it out, it came out to 21.62. I didn't think it would come out that fast, though, but it's come to fruition. Dollar peso reached the breakout extension target of 21.62, which will remain resistance. Support will be 21.22. And on to the dollar yen. This has just been screaming high like crazy. The dollar yen remains on a hella run. Weekly resistance level the market may try to attain will be the resistance at 957 with support at 856. Did seem a stretch, but if it wanted to make it up there, but yields are doing a lot better, so probably not. But it was going to be 956, actually 957, 856. And to the dollar index. The dollar index closed higher on Monday on the backdrop of U.S. rates. Resistance for Tuesday, 92.68, was support at 91.71. It's already turning back here. We've already discussed that. And like I said, we already go over all this stuff when we come in on Monday, which has the complete review as we go into the week. So we already know the drill here. We've already talked multiple times. Don't even want to hear about bull market unless we get above 92.68, and would actually be 2 consecutive closes to say it's broken out. So anyway, enough of that. Move on to the cross rates. Keep this show going. Well, no changes here in the Kiwi yen. We're just sitting right here, tight as a drum. No changes at all on this thing. So let's go and move on to the euro pound. Boy, this thing still looks sick as a dog. And euro pound, we had 85.95. We are pushing even lower. And I believe on this one, we said a break on either side would allow this market to test to new lows. Market just looks terrible. We do have this low way down here, which is 85.31, probably off of a weekly. Don't know if it'll go all the way down there, but that would be support, which would be 85.31. And resistance will now be 85.95. Onto the euro odd. This thing looks in pretty rough shape also. Support, you can see right here, is going to be this open body right there, which is going to be 53.97. That's going to be resistance right there, 55.64. Onto the euro kiwi. No changes here in the euro kiwi. Look at that. Yesterday we finished it with the doji. We've kind of pushed up a little bit higher here. But, and actually that's even probably, look at that, that's as good as it could get right there, which was at 66.71. We'll just go with this nudge right there, that high, which is 67.06. If you were playing the short side, you wouldn't want to see a close above that. That would, you'd have to, or else you could just keep your stops above that. Moving on to the Aussie yen. Kind of started to break out a little bit here on the, or trying to make a push higher in the Aussie yen. Resistance is going to be that prior high, which is 84.02. And support is going to be right there at 83.12. And we can round it out with the guppy. Boy, this thing is making another trudge to the upside. No changes, 51.36. Only difference is the low now is going to be right there, 49.92. And lastly, with the sterling odd, Trying to make a push above here. That would be resistance, which is that prior high, which would be 81.07. It did get above it, but that would be resistance. And support's going to be right there, 79.87. And that'll do it here for the bias chart. And we'll just take a quick look and see where gold is at and crude. We have recovered off of that 1666. We talked about that as a big weekly level. I think we have that as a, right here. There you go. 1666 on continuous gold has defended that. Then let's take a look at crude. Still holding up rather high. They did have some fighting there, or there was some attacks from the Houthis onto some Saudi installations, I believe, yesterday. So that gave us a little bit of kickback up in here. Resistance right now would be 66.26. Then going back here, as I referenced here on the 10-year note, we defended that 31.23 and with 32.07. It's allowed the NASDAQ to come off a little bit. We'll take a look at that. You can see here, now we are pressing up against this 12,543 here. But you can see here, we're well above same day VWAP. We're even above 2-day VWAP, and we've actually generated a buy signal on the exponential moving averages. But I think that we just got a little bit overdone yesterday. I was even surprised. I was really frustrated. I had made money in the morning, but I just kept thinking, okay, it looks like it's going to rebound the same way Dow was taking off, but that wasn't the case to be. And we came off. Fortunately, I didn't try and fight it, but I did miss a great opportunity to step in on the short side when I stepped away from the desk. Take a look on the 2-hour chart, and you can see here, and I thought about that. I had that parallel trend line, and when we were on our way up, I go, I wonder if we're going to have something like this. And sure enough, we did, and then this market, eventually sold off. Just a quick look at Bitcoin. Wow. Doggone, look at this, 54,000. Next key resistance would be right there, 55. Quite the surprise. Well, that'll be it. Thanks for joining us here in the European crossover webinar, and we'll see you in the chat room. Didier said looks at Ethereum. Let me take a look here. I don't do Ethereum. I mean, I think it allows it to come up. Let's just take a quick look. It does. It does. Yeah, it does. Okay, so it's making a move here. You'd be looking at a fib extension. I mean, a fib. %78 comes in at 1878. 1878, and then also the resistance would be right there. That would be resistance. And you can see that also comes in with these stabs in the wicks. So it'd be 1878 is the 78%, and resistance would come in right there at 1889. So I hope that takes care of that. And we'll see you in the chat room, and have a good day.